Hey guys, how's it going? It is after hours, it's Monday, it is August 3rd, just a little after 5 p.m. And taking a look at the heat map here, overall green day in the market, right? I saw an interesting statistic today that I believe over the past 3 months, there have only been one red Monday. So stocks only go up on Mondays, it seems like, which is actually pretty interesting because if you know me, you know I like to open up or sell my cash secured puts on red days. So typically then I should wait until maybe Tuesday to open up some cash secured puts. But there were some earnings coming up this week. I couldn't wait till Tuesday. I wanted to get in on the juicy premiums even though it was a green day. And stay tuned and I'll let you know what plays I opened up to play some earnings this week. But look at the big board here. We can see Microsoft got a good pump today. And I believe this is off the rumor that they might purchase TikTok. Looks like they were in contact with the government and they okayed the deal if Microsoft wanted to purchase TikTok. So I think that's what this little bump is from. But Apple was also up 2.5%. Other big tech stocks were actually down, right? Amazon down 1.7%, Facebook and Google down a little less than 1%. Semis, Nvidia took off again, 3.7%. Nvidia is a $440 stock. They are the ones that really need to do a 4-to-1 split. I would love that in addition to the Apple split. But Micron again was flat, right? I told you in my weekend update video yesterday that I might look into getting into the Micron. And I did look at it this morning, but the premiums just were not very good on Micron at all. Nothing seemed appetizing. So I actually stayed away from Micron. It would have been great, right, for Theta gang because I love stocks that trade sideways because that just means that Theta or time decay just eats away at them slowly, and day after day I just collect more profit. But the premiums and the return on risk just wasn't great in my opinion on Micron today, so I just didn't like it and I didn't want to force a trade. AMD was also kind of flat today, although it ended flat. That doesn't really tell you the whole story about AMD, and let me show you the stock graph to show you what I mean by that. AMD was a kangaroo stock today. It was up and down and up and down and up and down all day long. And I will admit, once I didn't get a good position that I could find on Micron, I went back to AMD to see if there was a good opportunity to get in on some puts again on AMD. And I thought, okay, if it's going to go up and down, maybe I can catch it on one of these valleys here and get in at a good strike and good premium. But also, looking at the options chain on AMD, I couldn't find anything that was juicy for me. The premiums on AMD have dropped considerably. So let's just take a look at the at-the-money return on risk here. So that would have been $128 in premium divided by $7,700 in capital. And that would have only been a 1.7% return on risk, which is much lower than if you remember the numbers from last week, because that was pre-earnings and now we're post-earnings, post-IV crush. But in order for me to get in at a strike that would have been worthwhile, I was looking at the 72, maybe 73 strikes, just to see, because $27, let's say, divided by $7,300 in collateral would have been just about my personal minimum of 0.4% return on my risk. But I was looking at this strike price, I looked at the stock price at 77 and said, you know what, there's only a $4 buffer there. And I personally think AMD is going to be due for a pullback just because it took off like a rocket the past couple of days. So I didn't feel safe, I didn't feel comfortable getting in the low 70s. If I could have gotten in at the mid to high 60s, I would have taken that trade every day. But low 70s, considering that the stock was in the mid to high 70s, it just wasn't for me. So I also backed off the AMD trade as well. But so you're probably wondering, what tickers did I play today? Well, if you saw my video from last night, you know I was looking hard at Activision Blizzard. And, I opened up the options chain. So first of all, let's just take a look at this graph for today. We opened up a little green and then we slowly just took off all day long. And then if you'll notice, we opened the market at around 84.33. So within the first few minutes, within the first half an hour, we dipped a little bit red. So this is when I thought was a great opportunity for me to sell some puts on it because we were going down. So I did end up opening a position early in the morning, right around this time period. However, if I had waited maybe about an hour or so, I actually left quite a significant amount of money on the table because if I waited, the premiums actually were higher a little bit later than when I opened my positions. And it's actually odd to me because I couldn't figure out why necessarily that was happening, because the VIX was also lower than it was when I opened my position. So in theory, if VIX is lower and volatility is lower, then option premiums should also be lower. But it may have just been the volatility of this individual stock that went up, and that's what caused the option premiums to actually be higher than when I opened the position. But I will admit, I did leave a few bucks on the table. But at the end of the day, like I said, I'm going after the meat in the middle. I'm not going after the buns on the top and the bottom, because there's no way you can time every option perfectly so that you get 100% of max profit. That's possible, right? It's impossible to open every option position at the best exact time. So you got to take what you can get. I'm very happy with the premiums I did collect, which I'll talk about in a second. But so you can see that we went from about $84.33 down to about $83 and a penny or two right within the first half an hour of the market opening. We ended up closing the day at $84.79, so up about 2.7%-ish. But then, as you can see, in the after hours trading, we went from about $84.79 to all the way up to $87.40. And that's not necessarily because of Activision Blizzard specifically, but actually more to do with Take-Two Interactive, which is another video game company. So they had their earnings after hours. And as you can see, they did pretty well, right? It traded flat pretty much all day long. After hours trading, we were about at 167.69 when the market closed. And actually the stock was halted for about 20 minutes, meaning no trading was taking place on the stock. And actually, I'm not sure why. I tried Googling it, trying to figure out why they were not letting people trade this ticker after hours, at least for the first 20 minutes. But I couldn't find a good reason in any of the news articles. But regardless, as soon as they opened up trading, the stock jumped from 167.69 all the way up to 176.20. So it jumped up almost, $10? Which is crazy. And so I think once people saw that last week EA Games, another video game company, had good earnings, and now Take-Two Interactive had good earnings, I think by association, Activision Blizzard got a little bit of bump after hours because they're another video game company. They actually have earnings. If you scroll into the bottom here, they have earnings tomorrow after hours. I mean, not that I put a lot of weight in this, but 84% of analysts right now have a buy rating on it. But I think, nothing is guaranteed in the stock market. But I think there might be a good chance that Activision Blizzard is also going to beat earnings. They have a very popular video game out right now in the Call of Duty franchise. And I heard a rumor that they are going to soon announce some updates to that video game as well, which I think people are looking forward to if that's true. So hopefully we get a nice run up from earnings tomorrow on Activision Blizzard. But on to what I ended up opening. So as I alluded to earlier, I sold some puts on Activision Blizzard, and honestly, I went hard because the premiums were so juicy on Activision that I kind of loaded up on some puts, in my opinion. So just to take a look at the at-the-money put, you could have collected $508 in premium at the money for an $87 strike. So on $8,700 in collateral, that would have been, look at this, compared to AMD, 5.8% return on risk at the money. So once I saw these premiums were that juicy, I knew I needed to get in on the action. So what I ended up doing was I just wanted to play it safe because, again, I've never played or actually honestly paid much attention to Activision Blizzard. So I didn't want to jump in kind of on the deep end and maybe get assigned shares of stock because I'm not quite sold on if it's a good company or not, even though it looks like for the past few months it's been doing really well. So what I ended up doing was I sold cash ticket puts at 3 different strike values. So I sold one put at the $78 strike here, and I sold that one for $123 in premium. So as you can see, it's currently at 102 at the end of the day, so I'm already profitable by a few bucks on that option. I sold another one at the 77 strike price, and I sold that one for $102 in premium. So again, I'm profitable on that one by even more because it's only trading at $84 right now. And then I sold a third option at the 76 strike price, and I sold that one for $76 in premium. And again, I'm profitable on that one already in one day because it's trading at $64. So I didn't want to just load up at the same strike because I said, you know what, let me split it up a little bit. So if it does dip for whatever reason, maybe if I do get ending up assigned all 3 contracts, I can kind of average the cost basis down. Also, you know, tie up just a little bit less collateral on every option play. But I did end up opening up 3 cash secured puts on Activision at the 78, 77, and 76 strikes, 1 of each. And so far, so good. I'm profitable, but I'm hoping that Activision continues to run up tomorrow, and then after hours, they just take off like a rocket so that I can ride all 3 of these options to expiration on Friday and collect max profit. I mean, I'll be looking at a pretty decent payday if that happens. So as you can see, or as I told you, I collected $123 on the first option, $102 on the second option, and $76 on the third option for a grand total of $301, okay, in max profit that I could get if all these expire worthless. And so my total collateral was $7,800 plus $7,700 plus $7,600. So my total collateral was $23,100. So as you can see, I've devoted the vast majority of my account to Activision Blizzard, but that's just because I'm very bullish on the stock. I mean, everything that I've seen in terms of EA Games earnings, Take-Two earnings now, the stock over the past couple months, everything seems very bullish. So I was somewhat okay with this gamble, but let's just do a return on risk calculation. So $301 divided by a total of $23,100 in collateral at risk would net me a 1.3% return on my risk in a week, and just on these options. So I would be very happy with that if I can get a 1.3% return on this week alone. But let's just take a look at Activision on the TradingView chart here. So, I mean, look at this. It's just been taking off consistently ever since mid-March. I mean, it really hasn't looked back. It's just been taking off to the moon. But, you know, I mentioned in my previous video, I don't know where to draw this Fibonacci line right now just because it's taken off so much. I mean, it's been hitting all-time highs essentially week by week, which has just been crazy to me. But also, as you can see, if you look at this new trading indicator that I've been kind of messing around with the past 2 days, in terms of the squeeze indicator here, you can see that we have a lot of bullish momentum right now. Now, the one kind of questionable thing is that we're a little bit oversold on the RSI indicator, so maybe we're due for a little pullback. Not sure. I don't think that's going to happen tomorrow, though, because tomorrow's earnings. And like I said, I suspect Activision Blizzard is going to crush their earnings like EA did and like Take-Two did. But also, look at the Ichimoku cloud. The line is trading above the Ichimoku, which is another bullish indicator. So things are looking good from a technical analysis standpoint, in my opinion, on ATVI. So I'm really looking forward to their earnings tomorrow after hours, because if that goes well, then I think there's going to be a high likelihood, knock on wood, that my options will all expire worthless, and I should be able to collect max profit this Friday if all goes well and all goes as planned. Now, I did have a few bucks left over to spend on some more options, so I went back to Space because they actually had earnings today after hours. And as you can see, they didn't go so well, right? Earnings did not go so well. So Space traded flat pretty much all day long, maybe had a little bit of run up in the afternoon. It closed today at about $24, had a really quick spike in the first 5 minutes up to $24.87, and then it came crashing back down to earth to a low of about $21.78, rebounded a little bit, and as of right now, we're trading at about 22 and some change. So I'm actually okay with that because I kind of suspected and I kind of assumed that Space was going to have bad earnings, because if you look here at their past earnings, they have never really been great, although I will say it's been a lot closer than their estimate today than it has been in the past. So they were estimated at negative 26 cents per share, and their actual was only negative 30 cents per share. So not horrible. I actually thought it was going to be similar to the prior earnings where there's going to be a big discrepancy between the estimate and the earnings session. But because of that, because I thought that they were not going to have good earnings, I wanted to play it extra safe and sell a far out of the money put on Space. Now, I just want to say, a lot of people will say, and they're true, that selling a cash secured put is a bullish play, which I agree with. But I also think that if you sell a put that's far out of the money, it can also be somewhat of a bearish play in that you're giving yourself a buffer, or you're giving yourself or the stock a little bit of room to drop if it wants to. So I think it is primarily a bullish play. So that would be the best case scenario. The second case scenario would be if the stock just trades flat, because I mean, at that case, any Theta gang play is a great play. But I think if you give it enough of a buffer, you can be fine as well. And with a stock like Space, that always has good premiums. I mean, again, let's just take a look at the at-the-money premium on Space right now. So it's in terms of selling a put, we're going to look at $81 on a collateral of $2,200. So the at-the-money option has a 3.7% return on risk. So again, Space's premiums have always been juicy, and that allows me to sell a far out-of-the-money strike and still collect a decent return on my risk. So which strike did I end up getting it on? I went all the way down to $19. And at the time, I opened this up also in the morning. And at the time, if we just go back at the daily chart, Space was trading at around 23-ish. So at that time, I had about a $4 buffer. Now, clearly, I was looking good as the day went on because Space was all the way up to 24. That means I had about a $5 gap between where my strike was and where the stock price was. But because we pulled back because of, not so great earnings, my option is still secure, meaning my strike is not that close to being tested right now. It's closer than I'd like, but I still have about a $3 buffer. So I sold two puts at the $19 strike price, and I actually sold them for $13 in premium each. So actually right now, I'm actually minus $4 on each contract. So total, I'm actually down $8 on Space. But again, I think that's because as the day went on, I'm sure the volatility of Space went up because it was getting closer to earnings. So I think that probably caused a little bit of the rise in the premium value. And that's what I was talking about earlier in the video, where I left a few bucks on the table, both with Space and with ATVI, because I thought the highest volatility would be first thing in the morning. But actually, in retrospect, if I could go back in time, I should have waited toward around the middle of the day or end of the day. But again, I'm going after the meat in the middle. I don't need both of the buns as well. But I'm not concerned because with time, that eventually has to go to zero because these are weekly options. So yes, I did leave about maybe $8 or $10 on the table, but again, I'm okay with that. So I actually collected $13 in premium on $1,900 of collateral. So my return on risk for each option is about 0.7%. So, and I have about a 91% chance of profit. So I think those were good odds. A 91% chance of profit to collect 0.7% return times 2 contracts. So I can have a max profit on these 2 contracts of $26 this week because I sold them for $13 each. But that basically exhausted all of my dry powder for this week. I have contracts open on Activision Blizzard, which has earnings tomorrow after hours. And I have contracts on Space, which had earnings about an hour ago today. And so we'll see what happens with Space when the market opens tomorrow. Just take a look at the TradingView chart here. So again, Space shows overbought on the RSI curve, but the squeeze indicator shows a bullish momentum. And actually, the fact that it's breaking above the Ichimoku cloud also tells me this is a bullish trend here. So maybe we will rebound and maybe Space will hover around 22, 23, or maybe even go back to 24 for the rest of the week. As long as it closes at $19.01 on Friday, I'll be a happy camper. And I have the potential, if you remember, I had $301 of max profit from my ATVI plays. I add that $26 of max profit on my Space plays. I have a max potential profit this week of $327, which not too shabby. That would be one of my better weeks in recent history. So that's my trading day for today. I'm actually pretty pleased with the plays I made and the strikes I got in on the premiums I collected. Let me know, did you guys have any options open on Activision Blizzard? Are you playing any of the video game stocks? Did you guys open up on Space? If you had plays open on Space, I hope they're not getting tested from the dip after hours after earnings. As always, make sure you join the Discord server. We are in there almost 24/7. I mean, it's crazy. I'm in there from about 8 a.m. in the morning to probably like 10 o'clock at night. And then even then, I'm pseudo in there on my phone and tablet. So There are always people in there, friendly people willing to help out, answer your questions. If you just want to chat about trades, if you just want to post memes, we've got a channel for that too. So make sure you get in the Discord server while it's free. As always, leave a comment below. If you have any suggestions, leave that below as well. And happy trading.